Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome back to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, Executive Director and founder of Petra Worldwide. For years, we've focused on operational excellence. You've grown your business, you've grown your margins, you've protected your profit, and you've secured your market position. But eventually, every king must consider the transition of their kingdom. Selling your business is the ultimate harvest, but without a strategic shield, you might find that the IRS is your largest investor or unintentional investor at the closing table. Today, we're going to dive deep into the tax side of mergers and acquisitions. Well, here's a pro tip to begin this conversation. In mergers and acquisitions, the wisdom is in understanding the fundamental tug of war that happens between buyers and sellers. Most buyers want to buy a business with an asset purchase because doing so allows them to have a step up in basis of the equipment and the intangibles they are buying, which creates additional depreciation for them immediately in the early part of the process. However, for the seller, they typically want a stock sale. Well, why? Because a stock sale is generally going to result in a capital gain treatment, which has much lower tax rates than ordinary income recapture that they might face on an asset sale. At King Life, we help our members look at a win win situation, one that satisfies both the buyer and the seller without having the seller leave their legacy exposed to additional losses or leakages.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
If your business is an S corporation, you already have a powerful shield to avoid double taxation. Many of our small business owners in this community are S corporations. They are already leveraging the tools at their disposal. For C corporations, the government takes a bite of the profit at the corporate level, and then they take another bite of the profit when you distribute the proceeds from the corporation to the individual. For S corporations, you have to be really careful here and do your homework and analysis and make sure that you are paying attention to the built-in gain tax. If you have recently converted from a C Corp to an S Corp, there may be some additional planning and steps you need to consider as part of this merger and acquisition process. One of the most powerful tools in this process of mergers and acquisitions, when you're going through this harvest protocol, is the allocation of the purchase price to goodwill. While the buyer amortizes goodwill over 15 years, for the seller, it is often treated as a capital asset. We also look at restrictive covenants, agreements where you promise not to compete. Where they have value, be careful because payments for your personal services or non-compete agreement of your personal services could be taxed as ordinary income, not capital gains. Our goal is to shift as much of the value as possible to the capital column and out of the ordinary column to help you keep your tax liability as low as possible. Selling your business is not the end. It is the beginning of the next level of the legacy phase. But don't let a lifetime of hard work be diluted with poor tax planning. I'm Nathan Weaver. Live with confidence, lead with integrity, and build something that lasts for today and generations to come. We'll look forward to seeing you right here on the next episode of Kingdom's Wealth and Wisdom.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.